Hey everyone, welcome to a summary of what the heck just happened at Nvidia. Let's start with the obvious. Jensen signing the tit was the tip. But in the meantime, we should get into some of the risk factors and some of the good things about Nvidia because quite frankly, the earnings were actually pretty dang good. I actually think the market mostly overreacted when it sold off Nvidia 4.5% before the earnings call started and sold it down all the way to 8%, as much as 8%, when the earnings call was over. However, we did get some AI news today outside of Nvidia that could help us understand what the future of Nvidia might look like. And I call it a software consolidation risk. Let me give you an example after I first explain what I mean. If businesses fail because AI helps businesses defeat their competitors, those competitors are gone, and then you have less of a need from certain businesses to have software otherwise. That's option one. Or option number two is fewer people are doing jobs because of AI, leading to a reduction in the amount of licenses or SaaS seats, we like to call them, that you have because of AI. Now, an example. Klarna has 5,000 employees, and in an article in Fortune today, the CEO and co-founder thought that they could get their employee count from 5,000 at peak down to 2,000. Now, they're a buy now, pay later company like Affirm, and they think they can go from 5,000 to 2,000, not by firing people, but just by no longer hiring people because they're just going to use AI. They literally said their AI chatbot that they made in collaboration with OpenAI does the work of about 700 customer service agents. Now, obviously, this is really, really good, right? But AI might end up giving us the winner of some in terms of a scenario or what we end up getting, right? Where companies, in my opinion, like Amazon and Walmart, or in this case, Klarna, they can win big because they can do things a lot more efficiently. But because they can do things a lot more efficiently, you actually have those companies spending a lot less money, maybe on other products and services. Like something that was in Seeking Alpha today, also about Klarna, where they said, thanks to AI, we're able to consolidate, create a more lightweight tech stack, and stop using both Workday and Salesforce. So in other words, you have AI helping Klarna make more money, but they're also cutting out a bunch of AI like other software that they don't need anymore because of AI. So AI, in some regard, is helping the companies using AI or helping the people use AI, but could end up leading to fewer people with jobs, fewer software companies getting or competing, well, I guess more software companies competing for fewer dollars, basically. And of course, if you have less people in seats, then you need less licenses anyway. So it's really interesting because it's kind of like, who exactly is going to win? Well, at least at the moment, the biggest winner has been Nvidia because after all, they design chips and their valuation is actually relatively reasonable as long as you assume that this AI factory is going to keep growing. See, remember, they talk about this all the time, that, oh, hey, we're the AI, we're creating the AI factories, and there's $1 trillion opportunity to build out all these new GPU-powered AI infrastructure servers, data centers, whatever. But the problem is, and Jensen somewhat touched on it in the earnings call, is like, hey, once the $1 trillion AI data center is up and running, what do we got to do from there? And his argument is, we got to get even more efficient and have even better chips. But wait a minute. The market actually sold off after he made that comment because I think people were starting to go, yeah, that's a good point. Like, once we have the $1 trillion AI factory open, even if it's open with H100s, 200s, or whatever, do we really need Blackwell version 10? Of course, over time, we sort of slowly stair-step up in quality and efficiency. But there is also this potential risk that the big boost is what we've already seen. That's what created the hype and momentum. And if that growth rate slows, then people sell the stock. Because again, I think if the growth rate stays, I think the valuation is actually not horribly unreasonable. The valuation right now sits somewhere at about a 1.45 peg. A 1.75 peg. That's based on a PE ratio of 45 and a 25.6 expected growth rate. One sec. There we go. Just make sure somebody's got that. Okay, cool. Sorry. Anyway, so in other words, Wall Street consensus is that Nvidia is going to grow at 25.6% over the next 3 years. At a 45 PE now, it's only got a peg of 175. And right now, they're growing at about 8% per quarter, 8.3% per quarter. The benefit of 8.3% per quarter is you're actually growing at 33% annualized. So you're growing above that Wall Street consensus for the next 3 years. Where the concern comes in is what happens when that starts slowing down. Because now, let's link that to what I said at the beginning. If businesses are bankrupting other businesses, now those bankrupt businesses don't end up using software. If businesses are like, we don't need to hire more people, we're actually going to use less software and not more because the quality of software has gotten better because of AI, we might not even need $1 trillion software stack or infrastructure stack. Maybe we only need a $500 billion infrastructure stack because that's good enough. We don't need more AI. I don't know. But I'm trying to put together what markets might be thinking here, right? Because in my opinion, these earnings were actually pretty good. You're growing at a faster annualized growth rate on the quarter than markets are expecting for consensus going forward. The numbers that came out, in my opinion, were actually pretty dang good. Let's go through some of those. Q3 revenue is expected to be at $32.5 billion. We almost always beat that. Consensus today was just a little over $28.86 billion. We beat that with 30. We had a 3.9% beat there. Blackwell samples have already started shipping, and the mask update that they're doing, the lithography mask, that update has already been completed. That could be a time-consuming process, but they've already done that. So they're going to continue to ramp Blackwell in Q4 and next year. They don't expect to provide any guidance on Q4, but in terms of their Q3 guide, they're still expecting good growth. Their EPS beat, their gaming sector beat, their adjusted gross margin, while it came down from the levels we saw last quarter, is still amazing. 75.7% as, basically a company that just designs chips. Because remember, they don't manufacture chips, they design chips. It's pretty crazy. This is all actually pretty good. And there's one section that I really want to hit on that I think is really important because it also affects stocks like Tesla, and I want to hit on that one. Do just quickly want to mention, if you want my trend alerts, stock alerts, and access to course member live streams and the lectures on building your wealth, we've got a Labor Day sale going on. We just had a sweet 66% return on the last option trade I made of the day. This is actually the third time that I entered and exited this particular contract, and this particular contract was profitable each time I entered it. And the last one was up 66%, which was pretty cool. And then check this out. Have you ever seen one of these? I'm probably going to get demonetized for this. This is actually a semi-shotgun. I'm going to try one of those out soon. I'm going to have to make a video on it. But it's a semi-shotgun built on an AR-15 frame. It's kind of crazy. I don't know why I'm talking about that. But anyway, Labor Day sales over at meetkevin.com. Check it out. Okay, so the risk for Tesla is that you do still see this automotive expansion, 5% quarter on quarter, 37% year over year. It's a little bit of a slowdown given that that means you're at 20% annualized right now on automotive growth. And they're talking about obviously other, OEMs, car manufacturers or whatever, basically trying to create their own FSD, if you will, whether it's Mercedes or Ford or whomever. And Nvidia sort of provides that platform for them to be able to do that. Worth keeping an eye on that. As far as some of the comments that we got from the earnings call and some other details, they talk about the opportunities not only in automotive, but in healthcare, in medical imagery, drug discovery, health record processing, imagine insurance processing. Every PC with RTX is an AI PC. Honestly, I wrote next to that I'm AI exhausted. I'm a little exhausted by the same explanation over and over again from Jensen explaining how transformative AI is. I mean, if it's going to lose a lot of people jobs and make software better and higher quality and bankrupt a bunch of businesses, I guess on one hand, that's good for better software, but it's bad for all those people losing their jobs. But, I guess that's just creative destruction, I suppose. Talk about liquid cooling. Liquid cooling got a big shout out here. Hopper will continue to grow in the second half, Jensen believes. Q4, no guide yet. The complexity of AI is growing. Blackwell rack is sold in parts. That's because everyone's rack is a little different. It's a word-for-word quote from him. Our customers don't want us to do integration, blah, blah, blah. This is basically, you know, they don't want to rob like a Supermicro from building the racks or otherwise. The stock initially sold off when there was a remark about changes needed to improve Blackwell production. But again, they already finished that. They you know, made the modifications to the chip mask, and it seems to be fine now. 45% of data center revenue comes from cloud service providers. That represents over 85% of Nvidia's revenue, data center sales. And, you know, I have to say, these numbers are really good. The cash flow is great. They boosted their buyback authorization by $50 billion. Their valuation's fair. Like, everything about Nvidia is fantastic. It's a great company. By all respects, this company should be up, not down, you know, the 6.4% it's down right now. But, you know, the stock market isn't always rational. The stock market has to price in election risk. The stock market has to price in that we're about to uninvert in the yield curve, which could be the start of recession. The stock market has to price in recession. The stock market also has to price in rotating between, you know, something like, you know, mega caps and then potentially going over to small caps. Who knows? Maybe we're going to be at small caps at some point here, absent a recession. I personally don't want to be in small caps because I am worried about a recession. You know, earlier, for example, we went through a firm. A firm absolutely killed it. You know, they're lowering their expenses. They're increasing their bottom line. They expect to be profitable by the end of the year. They're able to grow their business at 30% while reducing expenses and taking lower loss reserves on their loans that they're making, which they hold a lot of on their books. It's all really good. Except in a recession. You go in a recession, those loans lose a lot more money than you expect. A firm goes bankrupt, maybe not. And then obviously AI investment slows down, especially if software companies start getting burned, like, you know, whatever it might be. It could be, you know, Salesforce getting burned or Snowflake getting burned or whatever. We'll see. But anyway, that's my take. Overall, great job, Nvidia. Love the company. I'm just not a buyer right now because, well, mostly recession. Recession and momentum. I think momentum is topped. And when Jensen signed the tit, it was the tip. Anyway, check out the Labor Day sale over at meetkevin.com. Thank you so very much for being here. And folks, we'll see you in the next one. Goodbye and good luck.
Advertise these things that you told us here. I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.
Even though I'm a licensed financial advisor, licensed real estate broker, and becoming a stockbroker, this video is not personalized advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show shall not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purposes of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services we may benefit from. I also personally operate an actively managed ETF. I may personally hold or otherwise hold long or short positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuer other than Househack, nor am I presently acting as a market maker. Make sure if you're considering investing in Househack to always read the PPM at househack.com.